It's just another Manic Monday in the stock market, ladies and gentlemen. Target is down about 7.5% over the last month. Got a notification this morning that it had dipped to my provisional price target of 150 bucks. On the surface, you look at the PE and you might say, hey, I mean, it's still kind of at a premium at 25. Well, all may not be as it seems with Target, and we shall explain. So, you might notice that EPS had an almost 60% decline from 2021 to 2022. This is in spite of the fact that they apparently got a big pandemic boost in sales, which they have seemingly managed to maintain and look like they may be continuing to grow. The growth has slowed, obviously, back down to sort of what it was in the pre-pandemic times. But, kudos to them, at least as far as these annual results go, as far as maintaining sales. That's a positive. But even though the revenue has gone up, there's been a big hit to their net income. Now, what I'm noticing right off the bat is that for the longest time, Target has had consistent gross margins in the 29 to 30% range. And all of a sudden, we have like a 4.5% drop down to 24.6%. Now, that may not sound like the biggest drop in the world, but when it comes to gross margins, when you're talking about $100 billion plus in revenue, each percent is something like $1 billion or so on the bottom line, right? So you would expect with something like a 4% drop to see a 4 point something billion dollar drop in net income, which that is exactly what you get. So when it comes to Target, the question that you need to answer is, one, will the revenue continue in this $109-ish billion range and continue to grow, 2 or 3% a year on average? Also, will their gross margins return to their normal level? Now, this gross margin was consistent through the pandemic, through through pretty much everything, at least in the last decade, right? So what do we think is more likely? That 24 to 25% of gross margin is going to be the new normal for Target, or that they will find a way to return to the 29 to 30% levels that they had pretty much for the entire recent history prior to that. Now, on the surface, like without getting too much deeper into anything, my instinct would be that this is most likely the anomaly. Okay, one of these things is not like the other. One of these things does not belong, unless management has specifically guided that their gross margins are going to be lower. I would, going forward, I would assume that at some point they can get back to this level. At what point, is it going to be a thing where it goes from 24.5 to like 25, 26? Are they going to have to slowly build it back up, or is it just going to all of a sudden go back up to 28, 29, 30? I don't know that, right? But that would be the thing to focus on when coming up with your price for this company. Now, speaking of pricing, all right, if you were to run a DCF on it with the, let's look at the standard assumptions that are in there. So it's going off the $6 of EPS that it's got currently, with the average growth rate over the last 10 years, and adding in their tangible book value, because that's going to be a lot of like cash and inventory, etc. Okay, so the DCF does not look great as things stand with whatever the default amounts are that are kind of put into the model here. But if their revenue stays the same in, this 109, maybe now $110 billion, if they're continuing to grow it, area, and their gross margins return to the the normalized 29 to 30%, theoretically, we would expect to see a return to something closer to the 2021 EPS number, hypothetically. So, granted, if we do that, we're more likely to go back to 3 or 4% revenue growth or something like that, right? Now, let's just think for just a moment here. What kind of EPS growth were they having back when they were only growing revenue by 3 or 4% per year? So a little bit all over the place, but it did seem like it was on somewhat of a growth track before things really took off from the pandemic. So why don't we try throwing, I don't know. First of all, let's say that, bottom line growth slows down after they normalize, right? And let's throw, though, that 2021, something close to that 2021 number in here. Okay. So if you believe that the gross margins will go back to where they were, and if you believe that revenue will remain at its new higher levels, and that growth will start to slow down and, go back to, sort of the pre-pandemic levels, you could make an argument that this is a $200 stock. All right. Now, personally, I like higher rates of return. So, if you're happy, assuming this best case scenario and whatever, and you're happy with a 10% return, you're a buyer all day right now. If you like to be a little bit more conservative, have a little bit more meat on the bone, etc., and you think that a return to those previous gross margins is imminent, and that there will be some degree of EPS growth from there, you could justify still a buy all day long if you just want a 12.5% return. Myself personally, I like going for the moon on something like this, in a sense, right? Or, even shooting for the stars and maybe hoping I land on the moon. So I would want, for making the generous assumption that, they do succeed in going back in the very near future to those previous levels of gross margins, and that revenue continues to, grow from their new highs, I would want a 15% return for making those assumptions. And so something like a $150 price target is more or less what makes sense to me. Okay. And that's why it was on my watch list at that price, and why I, rushed to come on and make this video after getting that alert. So you let me know, what do you think the future holds for Target stock? Do you happen to own any Target stock in your portfolio? I think this is a pretty interesting company. They've got really good dividend growth over the last, say, decade or so. I mean, look at this. Back in, 2014, the dividend was $1.90 annually per share, and now it's over $5 a share. That's super impressive, okay? I think, regardless of what's happened recently with the price, if you had bought back here, you'd probably be pretty happy with the dividend growth that you've received if you're a dividend snowball investor. So let me know what you're thinking in the comments below. Throw a like on the video. I hear that helps with the algorithm. Also, join our Discord. It'll be linked in the comments below if you wish to engage in more conversations like this with the other members of the Discord who subscribe to this channel. Take it easy, everyone, and have a wonderful day and week. Cheers.